Welcome everyone and Happy New Year. It's the 3rd of January, 6 o'clock UK time, just gone 1 p.m. in the afternoon Eastern time. And yeah, let's just dig into these markets. Already in this first week we've got a lot of news to get through. We've got US jobs on Friday, Euro retail sales on Thursday, and your US runoff elections, etc., on Wednesday. So that's potentially a lot of volatility to come into this first week of trading. But in the meantime, let's just see what the charts are telling us. So what we've got here is the daily chart on the right and the weekly chart on the left. And starting off with the Nasdaq, because I believe what the Nasdaq does, the rest of the market follows. I believe that for a reason, because it works. So if we start off with this weekly on the left, you can see how we've had this huge move up here into resistance at 12.42, round up the July time, and then a 1, 2, 3 wave correction, and then a 1, 2, 3 wave move into Christmas and the New Year, and we finished sitting up very highly. We looked bearish, and then we just held up on on New Year's Eve on Thursday, and then sat up there very nicely, very bullish. And there is some divergences up there. So we've got on the daily chart on the right, we've got a MACD up here, which is divergent. We're underneath the midline, and the moving averages are flat. And on the weekly chart, we have volume here, which is okay. I mean, in the couple of weeks before New Year, we were pushing up with volume. This is called this is an oscillator called Awesome Oscillator. Ignore that. Let's just carry on with the MACD. So the weekly MACD, you can see, is, look, we made a new high on the weekly chart, but we've made a lower high on the histogram of the MACD. So we are divergent up here. Clear divergence. Look, if we look at this high up here compared to this new high up here, we've made lower high in these charts. So I'm looking for some healthy pullbacks in this market, purely on the back of these indicators. I just think we are sitting up really high, and these indicators are telling me that the market at the moment is not happy up there. So if I strip this back, just realised what I'm doing. So if I strip this back and then start to draw on these charts, bear with me one moment. So we've got this 1, 2, 3, 4, 5, 1, 2. So we at least need a corrective wave. I think we at least need a corrective wave into 12,420. The 20-day moving average on the daily is here. We did end up, like I said, we did end up into New Year's Eve very bullish, sitting up very nicely. But I'm just concerned that the wave pattern and the divergence here is showing a potential pullback in the early part of the year, and that's typical with January. I would normally expect January to come in and pull back. That's a typical cyclical move, and then once we settle into the back end of January, early February, in a normal year, then you would start to pick up into April, May, sell in May and go away, and then pick up back end of the summer into the autumn. That's the sort of typical pattern you would have. So coming into the back end of the year, sitting up is not unusual, but it's what we do in this particular first week that I think could give a good indication of what we're going to see potentially in the rest of January. Bearing in mind the sort of events we've got and data we've got coming up, etc. So let's just flick across to the Dow Jones, and then we'll look at Europe. So Dow finished up really strong. We had the last 2-3 hours of the year saw a good, I think it was a good 250, 300 pip move up in those indices. So that's incredibly bullish daily. And so this is, you've got the move, we're currently still under the midline of the MACD. We're potentially crossing to the upside of the MACD, but here's the divergence again. We've got a new high in the weekly, but a lower high in the histogram. Okay, so if we close under, so we closed at 30,606. If we close underneath that Thursday low, then that's just a sell signal, pure and simple sell signal. If, however, we just dither up here and then ultimately pull back to the 20-day average, that's incredibly bullish. So what we're going to see in the early part of the week could give us an indication of what we're facing. If you look at this weekly chart on the Dow, in fact, let me get rid of this fibs. You will note that we spent 3 weeks going nowhere. 2 weeks before the end of the year, we dipped into support, which gave that leg up in the back end of the year, and of course, and there's the subsequent very nice close on Thursday. But there is no reason to sell this market, but there is evidence that we're running out of steam. But there is no reason to sell this market at this point in time. Right now, switch to Europe. FTSE. New high, close underneath. So we had a sell signal on Wednesday the 30th on the daily chart. And we continued lower into New Year's Eve. So the FTSE is, let's just say, a lot weaker. The weekly chart finished with a pin bar underneath this 89-day average, suggesting we could come and see 6,000. So I wouldn't be at all surprised. We've actually got a gap down there at 5.8. So the FTSE is definitely showing the kind of weakness that we may start to see in the US market. The monthly, however, is different. The monthly did hold up for the last 2 months of the year. And although this is a pin bar under the 89-day average, we've still held up only just marginally closing below the previous week. So it's not an outright bearish signal, but it certainly showed a lot of weakness in the back end of the year. So there's a lot, at the very least, a lot of profit taking in the back end of the year. Right, DAX, and then we're going to move on. We can start to move on quicker now, as I need to get through a lot of information. So let's look at the DAX. Oh, there it is. And again, just with the FTSE, we actually closed just under the 2020 high. There's the 2020 high from the week beginning the 17th of Feb. So we've closed all the gaps, gone back to the 2020 high, and we sat underneath it. So at the very least on this daily chart, we look as if we need to see 13.5, having closed at 13.8. And again, there's the divergences. new high, lower high in the histogram, and a weakness in the histogram on the daily chart. You know, after all this climbing up here, the histogram is hardly above the midline. So these markets, the European markets, are stretched. Okay, so just bear that in mind as we get this year underway, we get this market underway. Right, now, quick look at the S&Ps. So just look at the sitting up really high again. So the S&Ps and the Dow were very bullish. It's the Nasdaq. Let's just go back to the Nasdaq a second. I want to remind myself what the Nasdaq looked like. It's the Nasdaq that was struggling. If we make a new high and then close lower, then this potential consolidation pattern is over, and we are going to be seeing some lower levels. Right, I'm going to look at Forex next quickly. Aussie. Now the Aussie has been incredibly strong. This is a really nice move off of 0.55, and here we are up, closing up at 0.77. At the moment, that still looks as if that's got further to go, but on pullbacks. So pullbacks into 0.75 could see that close much higher. Right, Euro US that's a very excellent sell signal. New high in the range, immediate close next day. MACD's crossed over. We're under the midline, and we are very divergent in the weekly. So strength in the dollar is generally that the weak dollar has been propping these markets up either side of the Atlantic. So if we see some strength in the dollar, or further strength in the dollar, that could indicate that what I've been suggesting in the indices is more likely to transpire if this euro is going to stay strong. Going to stay weak, sorry, going to turn weak. Pound. Now these are pretty bullish charts, but they are divergent still. Histogram's divergent in the weekly, and histogram in the daily is showing weakness. But the overall overall it's bullish, so I would expect any pullbacks coming into 135. We finished at 136.70 area. Any pullbacks into 134.80, 135 could potentially see us get back up to 140. US jobs on Friday. Now the jobs expectation is to show weakness. The estimates for jobs on Friday, US jobs on Friday, is to show further weakness in what has been a jobs market that has been running out of steam. The jobs creation in the US has been flattening off. So if we see further decline on Friday, that would really shake the markets up and could potentially see some follow through in the weakness in the US indices that we're seeing on that Nasdaq. A surprise positive number could see these markets just fly on the upside. So all I can go at the moment is on the closes into the back end of the year, which for the US markets was positive and for the European markets was negative. That's all I've got to show at the moment, but I'm suggesting that these peaks in the US markets are divergent and need pullbacks. Right. Let's follow this through quickly with A few other pound yen sitting up very bullish. That looks as if we could see 142, potentially 145. Any pullbacks to 139.50 are buyable. Euro yen, seen a significant drop. So there's been a significant drop in the euro and a holding up in the pound. So the pound's in favour, the euro is not. Any pullbacks to euro yen at 126 should see us potentially come back to 124. Now, I was asked a couple of weeks ago about pound Aussie. Now the pound Aussie is hard to call because we're sitting on a lot of support with pin bars. So we're sideways to bearish. I mean, any market that can't close above the 20-day average has got to be bearish to me. So if we start popping up into 178 on this pound Aussie, then I think we could see some lower numbers. So overall, I think the Aussie is much stronger than the pound. If we look at the Euro Aussie, that's telling a completely different story. Euro Aussie has really seen a major drop, and so we're 157.50. 155 down here is the major support. So any pullbacks to 158, 156. That's anything close to 160 is shortable. To see if we can then get back down to these levels here. So the euro is really weak here. Euro CAD, that's well and truly on the way south anyway. Any pullbacks into 155.50 could see that come all the way back down to 150. So very weak. And just note here that thinking about what I've been talking about on the indices, just note what we're seeing on the MACD on this one, because this could be about to transpire on the US indices. Note how we came up here. So we didn't make a new high, made a very marginally lower high. But once we did that V shape, on the second V shape, the histogram was lower. So the histogram was showing a lack of momentum. And what do we get? So far, we are 500, nearly 500 pips off of that high on the back of a histogram like that. So if I'm right about the US indices, they are the ones that are going to see some volatility and potentially pull back, whereas the European indices are already retreating and looking lower. Now, so my overall, let's get something straight here. My overall aim for the markets is bullish. I just think January is typically volatile, and I think I'm confident that we're going to see quite a lot of volatility, particularly in this first week. So I'm talking about volatility, not necessarily a complete change in direction at this stage, although I could be talking about a change in direction depending on how volatile this first week is. Right, that's enough of Forex. I'm going to quickly go through commodities and then quickly go on to stocks. Right, commodities, as I said, this time last year I was really bullish on commodities. And from early summer onwards, I was talking about $6 in wheat and $10 in beans. Well, beans are nearly $14, I think. Let me just double check. No, they're $13.10. Sorry, $13.10 for the beans. I'm expecting a really good year for commodities. I think this is just the start. So if we look at the weekly chart on this beans, now somebody also asked me about ETFs, so I'll talk about ETFs in a minute. So we've had this really nice pattern, and so it looked bullish here. It looked as if we were going to sit above 910 and break up here in the beginning of 2020. It looks as if we could have potentially broken up there, but we didn't. And again, this is a typical cycle of grains. We dipped right into sort of May and June and didn't really start to get a spring in the step until July. So expect a pullback like that in the beginning of the year. So we're sitting up close to a lot of resistance. If we can get any pullbacks close to this 1072 on the beans, I'm a buyer. And we're so bullish at the moment, it's hard to see it drop that far. But I would just be patient. You know, we are very high. We're coming up on lower volume. And again, cyclically, if we can see some further strength in the dollar, which we are seeing at the moment, then we need to wait for some pullbacks and see if we can get pullback into the first part of the year. So that's something to sit on for now. Let's have a look at wheat, because I've talked about wheat. So I was talking about $6 for wheat, and we're currently up at $6.40, looking higher. So I would like to see 580 on the wheat. We saw 580 2-3 weeks ago, but if we get a double top here and can pull back in towards 580, lower would be even better. Even better. That's what I want to do on wheat. On let's have a look at oats. That needs a decent pullback. Orange juice. I would hope to see it'd be great to see that drop down to 105. We're 125 at the moment. So hold fire on that one. I'll look at metals in a minute. Cocoa. I like cocoa. If we can get to 24.30 on cocoa, I mean. Coffee. I'm going to shoot through these now. Coffee is strong. It needs 120. Right, let's look at the metals, then we'll look at oil. Quickly look at lean hogs. So all these commodities are sitting up really well. Right, let's look at metals before we look at energy. Let's go to gold. Major resistance up there. So potentially gold 1850 on gold is a pullback potential. Silver. Silver's showing some weakness up there anyway. Silver would be a good pullback at 22.50. Again, at this stage, at 22.50, I would have thought it was easily attainable. If we see weakness in the indices, I could see that drop to 1936 if the markets get really nervous on this breakup area from July. And so gold, silver, let's look at oil and gas. So Western Texas light crude, US light crude. If you look at this weekly, that looks as if that needs 42.50. I think we've got OPEC meeting Monday. I mean, the daily looks strong, looks as if that could go up. I think overall the volumes have been very low in oil up here. So I think a move back to 42.50, 43 is needed. That would be great. That's what I'd look for long term. Gas. Now we talked about the cyclical move in gas. So we had significant pullbacks in this already. Gas looks as if it could perk up here. Let's look at the daily. I tell you what, if we see 24.50 in gas, I would buy that. I'd have a stop under 20 underneath is 22.50, and then see if we could start to break up. It's a decent push up from these lows. We're only just reconnecting the 20-day average. But I do like the weekly. I do think that weekly suggests we could get a lift up in the next few weeks. Otherwise, I'd sit back and leave that until early summer. Right, that's enough of that. Let's talk about commodities. Let's talk about stocks. Let me go to my list. So a lot of US stocks have had a good run. I'm going to look at some bellwethers. Let's look at Countryside Properties and Rightmove. Let's look at Rightmove. It's holding up really well. It's pulled back. We've been to a high of 690. Pulled right back to 640. That weekly looks very vulnerable. There's divergence in the weekly, so I think we could get another push back to the 700 maybe. I'm not sure if we do that. I'm not sure if we're going to sustain it. I'll show you why. So we've got a lot of little support here. I mean, if we can get to 670 and close above 670, then I think we can do a run to 700 plus. However, if we can't sustain this level here and start closing under 638, then I see that as going lower. But we had a similar pattern here. We had a similar little pattern here, and that went from a low of 550 to an immediate high of 640. We've got all this resistance up here at 702. I think at the moment that's still got a lot of legs. But let's see. Let's go through our usual lot. Let's go through BT. Let's start with the banks. So all we've done, I talked in the last couple of weeks, I talked about these needing pullbacks, and that's exactly what we did. We've seen a high of 158. We closed okay on Thursday. We came back to this 20-day average, held it, and closed higher. So I still think it needs a lower number. I still think this will come lower before it goes higher. If this is a bull flag, if this is going to be maintained as a bull flag, I think that will need to come back to potentially 138, maybe even lower, before we've got a gap up there at 170. It's bullish. It's sitting up. I just wonder if you're in it for the long term, sit and do nothing. If you're interested in getting in, then wait and see if we do get a pullback to the lower, to this around about the 130, 135, and then a buy. Lloyd's. So I'm not in my usual software, so I'll have to write these in manually. Same story. I think we could come and see 33 in Lloyd's. And let's look at Stanley. Standard chart. What do I call it Stanley for? Same thing. Looks as if we could come all the way back potentially. Could come back to 420, or if there's any real fright in the market, we could easily come back to 350, 370. But the main support there is around about the 420 on that one. So if you consider what's happened in the US, with US stocks, particularly even financial services, if you compare the Stanley with, let's have a look at Bank of America. See, the Bank of America, we've got a gap up there at 33, so we're not far, so we're sitting up. We've come a further distance, and we're held up better into the back end of the year. Not a lot in it. I mean, this is still not recovered, but it's recovered to a higher level than UK banks. Let's look at Wells Fargo. Okay, well that's soft. That's not come out that far off the low, 22 to 30. So it's sitting up, but that's more like the Lloyd's of the UK. Right, let's move across to let's move across to other stocks we've been looking at. BT. I've not done a complete scan, getting myself ready for January at the moment. Partly because of time. I haven't devoted enough time to this prep yet. I'll admit that. But the reason why I haven't done that is because one of the reasons because I don't think it's worth it at the moment until we get to see how the market opens in January. So BT has had a good run into, talked about this all summer, talked about buying it down here. So those of you new to the room, that's what we were looking at earlier or over the summer, 96, 98. We've been as far as 140, pulling back. Look as if anything, if we come into 120, if you're not in this and interested in BT, we could so easily see 120 again on that, possibly lower. You can see the channel I've drawn suggests, yeah, 120, that suggests 120. We could, now anyway, I won't I'll just move on a bit faster. Right, oil, BP. That's the wrong one. I'm looking for a pullback in the oil price. So I think 240 on this one is possible. We're definitely sort of hanging. We're not able to sustain these prices up here. So I think that definitely needs a pullback at maybe as much as 230 on that one. If I'm going to be wrong, then this needs to close above 260 in the first half of this week. Again, same scenario. If you're in it for the long term, do nothing. If you're looking to get in, then be patient for pullbacks. Otherwise, there's some good stocks out there which are well worth looking at. Now we've looked at, let's look at Tullow. Stay on the subject of oil. Yeah, see, Tullow's a good stock. It's got potential. It's a bit of a scrappy chart. You can see it's taken a long way. It pulled back for ages into September before getting a run up from 14 to 37. So it's been on a decent run. So I could easily see that coming back to 2021. We're 29 up here. We keep closing lower. So the pullback I'm suggesting in oil, I think that could come back to 25 and maybe lower short term. But longer term, I would expect that to recover. It's got a massive gap up here. It's got a lot. It's got a lot to do. Right, other stocks. Let's move across to the healthcare sector. Why have I messed up with that? Okay, let's look at Glaxo. Picked the wrong stock there. Why have I done that? Let's look at Glaxo. Yeah, I mean, I think with any of these stocks, don't assume that just because it's a potentially good sector, there's a lot going on in that sector, that it's always going to go one way. So it's totally struggled with that 14. Here we are down there at 13.45. So we could see some further falls. I mean, there's a heck of a lot of support down there. Huge amount of support. There is a gap at 13.07. But all the time we're sitting on this trend line support, we could go back up to these highs. I think, I mean, let's just talk longer term. A stock like this that has been as high as 1750, I think if everything goes well in 2021, I think we could see 1750 on this one. We're currently 1734. So pullbacks in this one are definitely viable. Because if we do end up on the upside of this pattern, this breakout pattern, then I think I'm not convinced we're going to shoot up there, but I do think we will grind our way up there to that 1750 if all goes well. So that's Glaxo. Let's look at anybody else in any healthcare stocks. Let's look at Astra. Yeah, see how are they doing? We've got to close above 74.25 on this one soon, otherwise we're going lower. Now we've not completed a gap down there at 71.20. You could argue we've closed the gap by touching that 72.40. Okay. So if this closes above 74.25, I think this could push up soon. There's an awful lot of red on that chart. Awful lot of red. So until we start seeing some green, I will be very careful. But in the meantime, this is a really, really important area for it. So if we do start to see some green, I think we could recover quite quickly. Okay, right. Let me just open up the floor to anybody who wants to shout any other stocks. So we talked about SMDS early part of the year. That's been on a good run. Pullbacks to 355 are buyable on that one. Let's look at some miners. Rio's been on a run, seeing some pullbacks. CAS has been on a really good run from 256. Wow, that's been on an excellent run. Massive gap down there at 596. At the moment, it doesn't look as if it's going anywhere near it. BHP. As you can see why the FTSE is showing some decline. I think the pound's got a lot to do with this as well. There's so many stocks in the FTSE that trade in dollars. A strong pound will pull some of their profit levels back. A weak pound does them a favour. Right, I'm just going to select some more here. We talked about legal and general. It's very quiet tonight. Nobody's put any suggestions in the box. There's legal and general. So we talked about that one. That's sitting up very nicely. Really nice move off of 180, 177, 180. We keep getting very close to this big 275. We've not even touched 275 yet. So that's possible. We could see a pullback to 244. Something like WPP, an advertising conglomerate, that's sitting up. Pullbacks. That's. I think stuff like this is really important. If you've got a stock like WPP that can hold up, okay, it's dropped off from 837 down to 8. But all the time a stock like that can hold up, and that bodes well for the bulls. ULVR, Unilever. Let's look at it with the weekly. Where's that there? I think Unilever's fallen back into a lot of support. I think that in theory this should be a natural pullback area. So I think if we do come up, we may see 43.20 again. If we do, that's gapped up, isn't it? Okay, so it's a gap play. So if we hold this and we might come and see 43.20. We might do. if it's really bullish, we'll stay up here. We won't close underneath 43.50, and then we'll start to push higher. But ideally, you'd want to see a gap fill if you're in it, and you see that 43.20, buy more, potentially buy more. Because if we ultimately close above that little triangle, then we could get to back up to this 49.50 quite well. But I think it's going to be really important to see how the markets handle this first week of the new year. Yeah, that looks good. It's a good defensive stock. So I think it is an opportunity if we do come down to that and fill that gap. Right, let me look at BVIC, Britvic, yeah. Yeah, I like Britvic. I think it's a clean chart. It's quite range bound. Not unusual with a big stock like this. That's the current range, 765 to 865. It's possible we may dip underneath 764. If we do, if we dip underneath it and immediately close above it, that's very bullish. If we do this, I'm not saying we will, but if we do dip underneath and close immediately higher, that's very bullish. And the chance of us getting back to 865 and higher is good after that. Let's have a look at the fibs. Yeah, so 50% is 773. Yeah, it's looking good. It's looking good. And any pullbacks on that one are potentially viable. Right, I'm going to leave it there because I'm going to go and grab some food. But what I'm going to do is I'm just going to sit back with the information I've gathered already, and just let this market tell me what it wants to do this week, and see how we open. And then I will start to buy dips in the coming days, or of this week and into next week, if these markets look sustainable and look as if they're going to hold these highs and carry on. Otherwise, if we end up with a lot of volatility and we start seeing some very weak daily and weekly charts, then I'm going to back off on the long side, sit on my hands, and give this market longer to show me what he wants to do. All right, and I think that's a good place to be in this part of the year. Like I said, January can be very volatile. It's good not to just jump in and just start building a position in stocks at this time of the year. Just be patient. You know, I'm sure you know already, patience is a big part of trading, and patience is really key to how you manage your trade and how you manage your risk. Right, any more questions before I go? All right, have a good evening. 6 o'clock Wednesday UK time is the midweek review. If you're not booked into that, then do so. If you want the link, then give me a shout now while you've got my attention. I can sort the link out for you. Otherwise, I'll assume that you are booked in for that. Okay, and no more questions coming in. So thanks for joining me, and look forward to seeing you on Wednesday or this time next week, 6 o'clock on Sunday. Thanks very much, and bye for now.